The thing that everybody needs to realize is that there is an all-out war going on, and it's literally happening about a couple hundred yards, couple thousand yards that direction, which is OpenAI versus Anthropic. And they have positioned themselves. In fact, they've counter-positioned themselves to be opposites of each other. And
Yeah.
everything that Dario says versus everything that Sam says is specifically chosen to not necessarily be what he believes or what he wants to have happen or expects will happen, but to be counter positioned against them so that they are made to look in a different light. But all of this is for the intent purpose, the stated purpose of raising capital.
Nothing said on One Shot is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Michael, Vance, and our guests may hold positions in the companies, funds, or projects discussed.
One shot. Hello, Michael.
Well, it's a beautiful day here in San Francisco, but we don't have the extra floor yet, which will feature our new podcast in studio. That will probably take a little while as we still are in the construction phase. But turns out we don't have enough conference rooms to be able to withstand two people simultaneously with founder meetings going on. So Vance had to run home. I got the backdrop, but this is the first of what will become many one-shot podcast episodes. You want to share more about One Shot, what it means, where it's coming from?
One shot, to be one-shotted by something, usually in a positive context in terms of, getting into a rabbit hole. There's also a negative context in terms of getting one-shotted by something like ayahuasca and changing your personality forever. So don't do drugs. But I think the theme of this podcast is we want to go deep versus broad. We had 2.5, 3 years of doing the take of the week, and I think their desire from our end to go deeper and cover things within crypto, cover things outside of crypto, and cover the convergence of tokenization, fintech, and crypto. And so super excited about that. And I think, one of the areas that we've been finding a lot of energy from, especially as, the general anything with momentum bear market plays out, is in the public equity space. And I think there's some interesting themes happening there. And, we'll share more on podcasts to come, but it seems like a lot of the tokenization and stablecoin stuff is actually playing out within either the largest private companies or within public companies that exist today that are kind of trying to adopt this tech stack. And so,
Before we get into that, I think one point of clarification is we're not going to be. I think on Bell Curve, what we were doing was the weekly roundup, and every once in a blue moon, we'd have on a founder like a Sid or from Maple or other guests who kind of give perspectives. I think going forward, it's probably going to be more 50-50 founders and kind of specific subjects that we're diving deep on with not just your like run of the mill, fifth, sixth, seventh episode that you would hear on podcasts of like what's happened over the week. I think we'll be doing general market updates when there's kind of things that are notable, and there are actually some things that have been notable since we've been on air, and even this week. So we'll be talking about like general stuff, probably with more of a removed perspective than most of the other podcasts that exist, but going to be pairing that with more interviews and more in-depth subject matter, because frankly, we think that that's something that's kind of missing from the conversation right now. And we have a couple of subjects of things we want to touch on this week. I think stablecoins and kind of what's going on in public markets, whether that be crypto markets or public markets, is definitely one of them. And I think the other thing that's just frankly changed as an update in the last 24 hours or maybe 48 hours is what's going on in DC. Feels like there's some real changes afoot in terms of the crypto regulations. But I think it's also, worthwhile to talk about over the last couple of weeks since we've been on, just like the massive change that has occurred within the AI space, particularly with the advent of these new these new model upgrades. That I think at this point was maybe 3 or 4 weeks ago. Feels like basically there's something different in the water now. And I don't think we're going back. But those are kind of the three things, at least today we wanted to talk through. I don't know if there's anything else, Vance.
No. Why don't we talk through clarity? So today, Brad Garlinghouse came out and said there's a 90% chance that it passes by April. And from what we've heard as well, it seems like we are on a glide path towards getting something done. There's back and forth with issues like yield sharing. There's back and forth with issues like ethics. And it seems that we're getting to a point of conclusion, which is really positive. So I think with that backdrop, what's kind of your take on the goings on, Michael? What comes from this?
Well, it's not just Brad who says this. Polymarket now gives it a 90% chance of passing in 2026, which for anybody who follows any of the conflict polymarkets knows that usually it's people who have some inside information who are probably the ones trading in those markets.
There's also a guy that went to jail for
Oh, yeah.
betting on the Venezuelan.
Well, and there was I saw some TikToker who stood outside of Levi Stadium the 2 days leading up to the Super Bowl, timed the rehearsals of like the national anthem. National anthem at the Super Bowl happens to be one of the most popular prop bets. Like and like how many planes fly over is another one. But like literally, this dude was standing out there with a microphone and headphones, timing how long the rehearsal was, and got it dead correct and made like 100 grand. So, like how prediction markets deal with, like, this is kind of an ongoing conversation, which maybe we can rabbit hole on this episode or some other time. It's just like, how do we think about prediction markets and market structure around prediction markets? Like, is inside information good or bad? Should it be able to be traded on? Obviously, you cannot trade or profit off of inside information in securities markets, and that's kind of the whole point. You can when it comes to other markets. For instance, commodities don't have the same, restrictions. They have around market structure and kind of like fair market participants or participation, but it's not inside information. There is no such thing as inside information when it comes to like wheat or corn or oil. So all of this is to say, like, there's definitely some interesting stuff going on with prediction markets. Prediction markets today went from 60% clarity passing in 2026 to 90%. Somebody probably knows something. This was also, I believe it was this morning, the third meeting of the minds between, crypto people, crypto policy people. So the blockchain association type people and the industry people. And I know that the subject of today's conversation is the third meeting on stablecoin yield. It seems like that is the last remaining point. What has happened over the last few weeks is it seems like there was at least a Senate draft that was put forward by Senate banking, and that took a lot of amendments, let's say, or then I can't remember how many, but there were a ton of amendments. I think that was also the draft that Coinbase stepped out and said, we do not support this. In doing so, it basically killed all momentum. It killed the draft. And I think it's usually telling when you have someone who's in a position of power. When they say something and they say they didn't do something, usually what that means is they did exactly what they said they didn't do. And they are defending themselves inadvertently by saying, whatever it is. And in this case, Brian Armstrong, first words out of his mouth in the interview yesterday was, we had nothing to do with stopping the momentum of the Clarity Act. We didn't put our hands up and say, this isn't going to work. And we put the brakes on it. But in reality, they did. And I think there's a lot of finger pointing right now going on as to, is it Paul Graywall? And he's basically saying it'll be the banks that make this stuff fail if it doesn't go through. And of course, the banks are saying it's Coinbase who's just blocking this. So I think these are all negotiation tactics. But the core of the issue is there a construct or is there an agreement between community or regional banks, local banks, national banks like JP Morgan and Coinbase to find something that is basically not competitive, but also a business that works business model that works for them. And Coinbase's largest single business unit, largest single revenue line item right now is the yield sharing that they get, or the revenue sharing that they get from Circle when they do when USDC is held on Coinbase. They get 60% top line, I believe is what the number is. That is just like $1 billion of revenue that they get. And they're, you know, he's the CEO of a publicly traded company, and he isn't gonna sit there and kind of like let his business fade away. So he's gonna fight, obviously. But everybody's kind of positioning this as like, we need to do what's best for the consumer, and like we need to make sure everybody's treated fairly. And JP Morgan is like, well, we love the fact that we can have people deposit and we only have to pay them a basis point or two, but we get to lend it out at 4 or 5%. Like that's a great net interest margin for us. And they don't want the competition or letting kind of a loophole exist where Coinbase can, over time slowly eat away at that deposit business. Coinbase doesn't want to give up their $1 billion cash flow machine. But they also want clarity because they know that clarity will create market structure for the industry. And so there's just a lot of two-facing going on. It honestly, like my personal read is like Coinbase is really kind of they have been dual intentioned for a long time, and it's tough when you're trying to push forward the industry versus you have direct incentives and you need to get those incentives covered. Even if the secondary effect is like a positive industry momentum, but you need to take care of the primary first, which may be against the secondary. There's just like a weird kind of incentive layering going on. So it's been tough. But I think if we're able to get market structure passed in a whatever way, shape, or form, ultimately kind of like gets passed, this is what the industry has been waiting for the last 5 years. And we get to ensure that a new Gary Gensler-esque era isn't possible. It'll leave a lot of room for interpretation. It'll leave a lot of room for rulemaking, and that's what SEC and CFTC are set up to do. Our own Vance Spencer is now on the advisory committee for the CFTC, which I think was pretty awesome to see announced last week. So look, I think there's a lot of people who are lined up ready for this stuff to kind of take off. Market structure, clarity, whatever it is potentially that starting gun. And if Polymarket is right, if Brad Garlinghouse is right, we got a 90% chance. And I think a lot of people are expecting this to happen in weeks, not months. So as bear market and as down as everybody probably feels right now in crypto, there is a light at the end of the tunnel, potentially. And my bet's on clarity kind of pulling us through.
Yep. My bet is on the same. And I think what we see from the crypto native perspective is that, this will open up a universe of marginal buyers. There's not a ton of marginal buyers of crypto today, just to put it plainly. There's a lot of marginal sellers, but opening that back up is going to be really positive. What we're seeing kind of on the ground at DeFi, interest rates in Aave, which is, backed by crypto endogenous collateral, are like 1.7% today. So like people are willing to accept far below the risk-free rate just to keep their capital in crypto. So that is actually a positive sign. But what I think that is a harbinger of things to come is that there's going to be a ton of consolidation in the industry. In each major vertical, and I would say the major verticals are derivatives, stablecoins, swapping, and I would say prediction markets too. There's probably space for a decacorn plus, but probably not much else other than that. And there's amazing returns to scale to technology, especially when there's liquidity. Like all the S curves that you see about network effects in crypto are basically that squared. But for everybody else, there's not going to be a ton. And so I think what you're going to see is that a lot of DeFi struggles, but the ones that really kind of persist and dominate and consolidate are really going to be just these massive, massive success stories. And, we were talking about AI today and what the future looks like. And even texting my dad, he was asking, what's the role of labor in the world going forward? It's so hard to say what, and there will be jobs obviously, but like the returns to labor will be diminishing going forward. I think returns to capital going forward will be massive. And you look at some of the capital pools in crypto, $380 billion in stable coins, all the market cap of the major assets. If we can figure out how to connect these two to a coming investment wave of what will hopefully be mostly fixed income opportunities to lend to AI, that'll be massive. And so the thesis is pretty simple. Owning one of these pools of capital is going to be really, really productive going forward. And, if you have confidence in what you're doing, the money will follow. And that is kind of how I think about the next epoch for crypto is just, we need clarity. We need some other things to play out, some consolidation, but the winners will be far larger than you can imagine. And the valuations are pretty rock bottom today, especially next to things, like, OpenAI at 800 billion and, all this other stuff. And, yeah, no, the bubble brewing in venture capital is epic. But the bubble in crypto is basically gone. Um, and that's a good thing.
We have a bunch of different investment committee meetings depending on kind of the subject, and one of them is we have one dedicated just to liquid assets, which requires frankly just like a different underwriting process than kind of the venture process. And one of the assets that we've been looking at, and I won't say which, but it is literally trading at like almost a 1x revenue and a 2 to 3x price to earnings, with like growth that is doubling every quarter. Like if there was anyone paying attention to these markets like we are, and we're still doing the diligence and haven't pulled the trigger yet, but there are some deep value buys in the liquid crypto markets. And kind of the way that we, at least one of the ways that we describe it to LPs, is there's basically three assets in crypto, or three different buckets of assets. There's Bitcoin, digital gold, or kind of like the reserve asset. There's all kinds of stuff that we could talk about with that. And that's so different from basically everything else. Then there's the L1s, or the smart contract layers, Ethereum, Solana. You'd even put like SWI or any of the L2s kind of in this camp. And then there's basically like digital assets that have value flows. And primarily, I think the age of investing in smart contracts or L1s, frankly, is over. At least until there's a new reason for more, or we become so limited in block space that a new technology actually is an advantaged position. Doesn't feel like we're anywhere close to being in that position. And so what you're basically evaluating as a crypto venture investor is, what is the business and why is a decentralized protocol the best way of generating the most value? And how does that value kind of go back to the token? And or are you okay trading at a price to earnings that probably is going to be an order of magnitude less than you would get if you were in the private markets? And that's current right now. It may change eventually. Historically, it's been, at or above what public market multiples are. But some of these things are in such deep value. I feel like, anybody with a capital base is able to really go, hunting right now and find some super huge wins. And just this week, the other thing to call out is I think yesterday was the day they announced, but Dragonfly closed their fund. I think just as there's dispersion within the landscape of crypto assets, there will also be dispersion, as we've been saying, within the landscape of fund managers. And a lot of the names that were around in 21 and 22 are frankly just not going to be around in 26 and 27. So there's been a lot of change, and Dragonfly's raising their fund. Kyle from Multicoin is stepping down. I think yeah, a lot of things are afoot. We've called this we're in the middle of the regime change, and any regime change, whether it be political regime, social regime, or financial regime, it's going to be tough, and there'll be winners and losers. But what we are moving from is this world where crypto is selling or distributing products and services to crypto users. What we're moving to is crypto is a technology that is being used by external users and consumers to reduce costs or create better products and services that are then distributed to people outside of crypto. It's like the movement of like, we're moving and doing everything in to this technology layer that we're expanding and extending externally. And so, yeah, I think it's just a lot of these themes that we've been talking about on Bell Curve for the last year or two are now coming to fruition, more violently and more rapidly maybe than anybody would have thought. But hey, look, Bitcoin broke 60K and we're still here. So we can withstand the volatility.
We didn't die. Yeah, the other stuff that we've been looking at is just the universe of public names that has to do with tokenization, and sometimes that's coins. Most of the time, that's coins. Sometimes it's public equities, and something that we've just kind of been finding is, everyone gets put through this trial by fire now when you go public. I thought the Sebastian, I don't know what his last name is, but the Klarna CEO, that interview was fantastic. And they were worth 42 billion. Now they're worth 5 billion. They dropped 25% last night after they missed earnings.
Well, there were 42 in the private markets.
Right, in the private markets. And it's just this remarkable thing where he said, when I was the highest valued fintech in Europe, everything I said was gold. So exciting. That's so brilliant. Like, you'd go off script and people are like, that's amazing. And now, and he's in the middle of this right now, turning it. He's like, everything I say, I just get shit on. I say I'm reducing employees, and they say that I'm, a heartless capitalist. They say, I say I'm growing top line, and they say that I'm taking too much risk. And you can see Klarna, and it's not something that we're buying, is in the early stages of this turnaround. But like Figma just went through this, CoreWeave went through this. It's really easy to beat your chest when you're a private company or a private token and say, look at me, look at how valuable I am, and I'm brilliant. But liquidity is such a virtue, and it's so fleeting, and the market is such a harsh judge, and sometimes in the wrong way. Like when this AI, when this karaoke machine company released a AI trucking logistics program, and all the logistics companies crashed 30%. It's humbling, and you do have to stay humble. But I think what is going to happen in the age where AI takes over a lot of business process and tokenization reduces the cost to transact is that you're going to see a lot of dark horses emerge, because really, like, the technology sets the table. Everything else is window dressing. And the people that are grinding away at this technology year after year after year, they eventually release something that sometimes is very powerful and can reset the dynamics of whatever industry that they're operating in. And so, just seeing all of these names, both in token markets and public markets, have the same sort of dynamic, it gives you this sense that it's a really great time to be a picker of things in public markets. And venture for us has been really slow for, probably past 6 months, 9 months. We've done, a deal or two a quarter, but it's been slower. It's just so many more interesting things happening in public markets right now, which is great. And I think the surprising thing for me, at least, is like talking to our LPs about this. They're over the moon that we're not doing the 52 card pickup game of venture capital, where you just kind of see which one lands face up. Liquidity is a premium branding advantage now too.
Well, and to be clear, public markets extends to not just equities, but also public tokens. And
Yeah.
being able to evaluate tokens, which, like, when we started Framework in 2019, there were no private rounds. Like, everybody forgets, every single asset, or just about every single asset that we bought in that first year, were remaining vestiges and like hangovers from 2017 ICO stuff. And it does feel a little bit similar to that. Like, the nuclear bomb has gone off, and like radiation is slowly dissipating, and like some of the early people are coming back to like go inspect and see what's left, and kind of pick up some valuable assets in the process. Um, so that's kind of what it reminds me of. But I do think, and to go back to the venture stuff, like the venture deals that we have done in the last 6 months, I think have no intention of launching a token ever. And that is, I think, kind of where things are right now. If you had an expectation that you were going to do this private round, a Series A, Series B, you were gonna, get to some scale, some metric, whatever, and then you're gonna launch a token, and that was basically the playbook for every single founder over the last few years, with the expectation of like, oh, you give 7% to Binance and you get listed and you got this $1 to $2 billion valuation, and things take off, like, go gangbusters, and you've got this valuation, which allows you to recruit people, and then you've got markups and blah, blah, blah. And look, funds did this too. Like, this is the game that so many funds were playing for so long. And this is one of the reasons why I think there's going to be haves and have nots going forward. It's like, if your fund basis was, we play this Binance game and we get the markups and look at our TVPI, and then everybody goes, well, wait, that's real money, right? Right?
I know.
No, it's not.
There your IOUs. That's as good as money.
But the private markets right now are reserved for companies who, frankly, maybe have a crypto angle. I mean, usually have a crypto angle, but it's don't have a crypto token as their value accrual mechanism. So it's really just like traditional venture again on that front, which I think is healthy, and things will change. We'll go back to a world where tokens are back in favor, but I do think that it requires something like Clarity passing.
Yeah, and there was a world very recently where tokens had a premium to equity, and so things change. And I think what we're yet to see is what all of these large cap private companies trade like in public markets. And there's maybe a world where you're buying OpenAI, Anthropic, SpaceX far below what people paid for in private markets. That certainly has played out in crypto markets, and liquidity is a virtue and it's finite, and it's just something to think about and be wary of as you look at these things. So. Um, Let me ask you this, Michael. Do you have a MacBook Mini, or you're going to be a member of the permanent underclass, or will you save yourself?
I have a MacBook Mini. I don't have an agent running on it right now. I have installed OpenClaw, and um let's say I have started the process. I really just like the thing that I don't have right now is frankly like what's the killer use case? Unless it's for
But,
business
but
purposes.
talk about your brother.
Yeah. So I was gonna say, unless it's for business purposes, it's really kind of I don't know yet. Like the examples of like, oh, someone to book my flights and book my hotels. It's like, yeah, that's nice. But like sometimes I like booking my own flights so that I at least internally know like, oh, I got a flight on Wednesday because I remember booking that. Versus like, you gotta go to the airport right now.
I mean, I've used it, and I'm a Codex user. I was an early adopter of ChatGPT. I've been a late adopter of these coding tools. Vast majority of my friends who are using this stuff seem really enthralled by it. They feel really productive. I don't think they are very productive. For me, I use it for research, data analytics projects. It's certainly helpful for that. It does have a lot of missing context that you then have to stitch back up. For the blue sky projects that I try to go on, where I just say, pull me the list of 10,000 tokens, pull me the list of 10,000 public equities, tell me which ones we should invest in, buy a stake in, whatever. Um, there's a lot of distance between, here and where it would be helpful on that sort of project. And I don't think it's necessarily taste. I think it's probably just like a ton more context. So I do view it as like a potentially solvable problem. Um, but it does feel like, especially in this age, like the information processing power of smart people is now unlimited. So you should be using these things. I will kind of take the under on a lot of the white collar job displacement theorizing. Um, there will be new members of the permanent underclass. There will be probably new members of the permanent overclass. Like there will be some sort of dynamic rebalancing of labor and capital. But I do think right now is just an incredible time to be investing in the convergence of crypto, AI, fintech. And it's not like these crypto AI scammy projects. It's like very pragmatic use cases of tokenization to lower your funding costs, AI to lower your labor automation costs. Then you just have a better business overall.
Yeah, and look, I think I'm actually like got busy plans this weekend. My plan is actually to try and get like prediction market bot up and running to see and just like play around with some sports bets or some prop bets not in the sports realm, just to like see how it does, see if like there is a world where okay, if you've got an asset manager that can identify different dislocated markets or advantage, kind of like there's a percentage chance that this is happening, but this market is trading, well below that, like go and trade that. Like I'm curious to play around with that as a personal use case. The example
Mhm.
with my brother, yeah, he's a civil engineer and um is helping to bid on a lot of public um infrastructure. So like water, sewer, kind of treatment facilities, bridges, basically municipal infrastructure. And so it's public works, which means that it's low bid wins. And so
Right.
the bid is an extreme process. But if you are so low that you win the bid, that's also the amount that you pay. So it's not a second price auction. It's a traditional auction. And so you want to get it. Ideally, you want to win the bid by $1. And you leave no money on the table, and if you win the bid by 10%, like that kind of sucks. uh,
That's how. Anyways,
so that's the way it works. But you can imagine that it took this group of people, who are traditionally civil engineers. It took them a long time to adopt things like spreadsheets and digital records of things, and obviously they could use every advantage they could possibly get. I doubt that there's that many people who are civil engineers or contractors who are doing competitive bid processes that have open Claude helping them estimate these systems. And the spec on these things is like hundreds of pages long. Like you get a binder, multiple binders like this thick. So it's a ton of information. So anyways, I've been hacking around with it. My brother's been hacking around building a bid estimating bot. I don't think he's gotten anything kind of solved yet. And I think, some of the test runs, there's definitely some hallucinating going on. Uh, but like going back to it, I think it's not that there's going to be this like one week we wake up and like half of the S&P 500 decides to get rid of 20% of their employee base. Like that's just not true. What we are talking about though is there is a world where if you don't have the skills of these tools, that could be looked unfavorably upon you in the workplace. And I mean, look, we have portfolio companies who have told us, they're like, we're looking at token usage by employee, and we're using that in our evaluation of their reviews and potentially like who we're keeping and who we're not keeping. So like learn these tools, and that I know that whatever article something big is happening got passed around the last week or two, like, and it's hyperbolic. It was great, analogy. The reason why I think it went viral is because everybody went through COVID, and if you use that as an analogy, everybody will relate to it. But uh, but the message on it is correct. Everybody who works in any form of knowledge work environment needs to learn this stuff. And what happened in SaaS is now happening within the startup world with AI, which is that it wasn't the big companies that adopted SaaS first. It was, the Fortune 100, the Fortune 1000. They were afraid that if they put their personal PII information of their employees in a SaaS cloud environment, that there was going to be a leak. And so it was the startups who had 25 employees that started using the startup SaaS HCM or CRM provider. And what the VCs saw, because they're all on the boards of these companies, it's like, oh shit, all of my portfolio companies are using this. Like it's spreading like wildfire in these companies, and they're saving tons of money by doing it. It starts small companies, bigger companies, larger companies, then the largest companies. And that same thing is going to happen with this, where all the startups are using these tools to be more efficient. They're doubling their productivity. They're reducing headcount and increasing productivity at the same time. They're also hiring for people who are just like prototypers. Like we had one founder who came in and met with us and was like, I just need to hire someone who can prototype 5 products a year or 7 products a year, just like vibe code them. They don't have to be perfect, but we're just going to like release them and see what works and what sticks. And previously that would have been like 5 teams of 5 people just to like prototype these things. Now it's one person with Claude. So like that's going on. But just like I remember when right as we were finishing school, maybe a year or two before, there was this whole concept in the marketing industry that basically like it became possible to be a social media market manager. And what that meant was everybody, every brand, every entity had to have a social presence. You had to be on Instagram, you had to be on Twitter, you had to be interfacing with your customers. And well, who were the best people to hire in those situations? Well, it was all the kids who had been doing that personally and individually. Is like, hey, I can do this for you professionally. And I don't think it's the same. I think this wave is like orders of magnitude bigger than that, but it does kind of remind me of that, where it's like you're going to create a new class of employment, which is like vibe coder or prompt engineer. And so I think that's actually a much bigger wave than the people that we're going to lose because they're not able to contribute. And I think that these are tools. These aren't like replacements for humans yet.
I never minded the social media manager type, you know, I thought they were part of the business and thought they were interesting, to work with. I honestly did have some sort of issue with like engineering teams because like they would gatekeep data. They would, okay, we came up with all these ideas. Oh,
That's because you're on the business side.
no, that's all because you're on the business side. It's like, got it. It's like, oh, you wouldn't understand how complex this is.
Come join engineering, product, and design. You get all the data you want.
Yeah, but like, business people make the world go round. There's just like a bunch of data mungers on the back end. And now the fact that these people have been replaced, it kind of tells you how much value they were adding. And it was something when they really were partial to the whole equation, but now it's just like you've taken the rate limiter off the business to some degree. And so I'm not sad to see them go. I think like the software industry freaking out about its own demise is kind of ironic in some senses, especially when you think about like, the final form of like a software engineer, which is like one of these AI researchers. And it's like, yeah, these guys are super expensive. You got to pay, $1 billion per researcher, but you may only have to pay that person for like 2 or 3 years if you automate their workload as well. So, um, am I sad to see the engineering jobs go? Maybe, maybe not. I think it is more productive for society as a whole. For anybody to be able to build any form of digital business, I think that's a good thing.
Well, just to close the loop on the AI stuff, I think everybody here should go listen to the Dwarkesh Dario interview. And there's lots of really good points in it. The first is just that the CapEx build out. I think also the concept of space data centers is just like silly. So like pair that with the Elon Cheeky Pint interview where he's like, yeah, I figured it out. Within 36 months, we're gonna have them in space. It's like, no, I'm calling the under on that one.
Was but and what just one quick thing on Elon. He feels at risk in many different dimensions. And there's like this never bet against Elon thing, but like XAI didn't work. Tesla is now looking like it won't have any car sales, in the next 2 years. It's going to ship humanoids instead. SpaceX is worth 1.5 trillion on 8 billion of EBITDA that doesn't include building the rockets. Was Elon a ZERP phenomenon?
No, never bet against Elon. I think to say that XAI hasn't worked, I think is patently incorrect. They have
How it work?
they have the most installed Blackwells. Whether or not Grok just being distributed.
It's like saying Monad has the most TPS, therefore it's a great chain.
No, that's like saying someone who has literally the most revenue producing digital product that exists in the world today, which is a Blackwell GB300, and they have the most of them, and they've had the most of them since the fall. Like I don't know the numbers on XAI. It's making tens of billions of dollars in revenue, I would assume. I think the other thing, and I think Nikita was probably joking about this, like X itself has 30 employees. Well, the other thing the other thing that they did announce is that they have $1 billion in ARR just from subscriptions, not ads. So like X valued at, whatever the cost structure is, but X valued at whatever is definitely working. I think it'll continue to scale. XAI is, either single digit or probably low double digit billions of revenue. And look, I think, Tesla, yes, may have a lull in car sales. Who knows? The first Cybercab did roll off the factory this week. So where you think Waymos have been crushing it and they're worth $250 billion, like I think Tesla's probably going to get into that business pretty soon here. Like there's a lot of things that I think he is he's definitely playing chess and not checkers. And so I'm in the don't ever bet against Elon camp, except for when he gives you timelines. Then you always take the over. Because he is just like any contractor remodeling a house, it's going to be twice as long as whatever estimate they give. So
And I'm with you on that. I'm with you on the never bet against Elon when Elon does not have a timeline to get to. I think the issue with the Anthropic CEO, the OpenAI CEO, and Elon now as well is that the timeline they are on is A, determined by the pace of progress and ARR ramp of each other, but B, it's also determined by the amount of capital that they need to play in that race and the amount of chips that they need to buy. And if they never needed to go public, I would never bet against Elon. But the fact that Tesla is kind of wobbling up here and it's still a $1.4 trillion company, and then SpaceX is going to be forced to go out because they need money to pay for XAI and all these other things. Like, we are now on a timeline that is not of their own creation, and the public markets are fickle. If the IPO window is shut for whatever reason and they try to go out, it's gonna get fruity.
What you didn't factor into the number of the 8 billion, that it doesn't include the build of rockets, which I don't know that exact figure, or the lack of the cost of rockets, but what isn't factored into that figure is Starlink, which is the largest business within all of those ecosystems and growing probably the fastest. So I think the worry that I actually had with SpaceX for a long time was that SpaceX was going to basically do what PayPal, eBay did, which is like get rid of the marquee product to get more value in the public markets. SpaceX was going to get rid of Starlink to
Right.
generate value, but in doing so, revealed this like single like rocket business that in 2030 will be a really successful, thriving rocket business. But in the meantime, like they lose their cash cow in Starlink. The fact that he's consolidating everything, I think, is actually like a much stronger position to be in. And whether or not they go public this year, Michael Grimes, who's the head of tech banking at Morgan Stanley, who's done every single IPO, merger, whatever, was the deputy secretary, I think, of the Commerce Department, or he was in the White House. He left a couple weeks ago to head back to Morgan Stanley. I guarantee you that means that Morgan Stanley will be lead left as the IPO lead book runner for SpaceX. Does this happen this summer, this year, this time?
When is it happening?
I actually personally think it's 2027. I think they need more time to scale, need more time to grow. And post-merger installation of XAI and SpaceX is going to take some time.
Mhm.
But yeah, don't ever bet against Elon, and don't believe any of his timelines. I also though would bet against him in terms of data centers in space. I think that's just funny. He's trying to do that. What he is correct on, his take is that you have like 5x the power output if you're outside for solar energy if you're outside of the atmosphere. It's like, yeah, great. You solve one of the 7 problems. The other ones are like way harder because you're in space, which is like, how do you get them up there? And how do you fix them? Like these data centers don't just like set and forget. You literally have to be going in there and like replacing pieces, and devices are failing, and like you're fixing them constantly. So unless we build the space force of people that want to go live their lives doing some spacewalks every day at these data centers, I just don't see it being feasible. All of this to be said, I think Dwarkesh interviewing Dario, and then I think they're in India, wherever they are, where Sam and Dario are seen to not be holding hands in that like group photo opportunity.
Also, Dario's speech at that conference was terrible.
Look,
Did he get off his iPhone?
the thing that everybody needs to realize is that there is an all-out war going on, and it's literally happening about a couple hundred yards, couple thousand yards that direction, which is OpenAI versus Anthropic. And they have positioned themselves. In fact, they've counter positioned themselves to be opposites of each other. And
Yeah.
everything that Dario says versus everything that Sam says is specifically chosen to not necessarily be what he believes or what he wants to have happen or expects will happen, but to be counter positioned against them so that they are made to look in a different light. But all of this is for the the stated purpose of raising capital. It's like,
Yes.
they're the evil empire, we're the rebel alliance, and we're raising $30 million. Well, Sam's coming back and he's raising $100 billion. And like Dario on the Dwarkesh podcast talking about, well, if you're off by a year, you might go out of business. Like you got,
And he's totally right about
I
that.
don't
And
think he's right, because I think that assumes that you can't go off and raise more capital.
I think these guys are tapped out in the private markets, and we have different perspectives on this, but like the way that they're starting to message the OpenAI 100 billion raise, like, oh, okay, we're taking commitments. It's all coming in. Like, make sure you get some. Like we had a discussion at IC. Would you rather own OpenAI at $1 trillion or Meta at $1 trillion? And I think it was 50-50. People wanted to back OpenAI. And keep in mind, Meta has 200 billion of revenue. OpenAI has 20. I think the most likely path for these companies is that they're amazing generational companies. Just most of the value has been realized in the private markets so far. And I don't know if there's going to be additional takers over $1 trillion in the private markets. So, it's going to be a fascinating case study to see if you can, buy these in the public markets anywhere near these prices. I think it's either going to be, half off. And like all of these things are subject to the same laws of financial gravity where people unlock and they want to sell. Unless you're capturing all the value in the light cone and you're shipping the Dyson sphere or whatever, like AI, LLM psychosis terms you want to use, like $1 trillion is $1 trillion, and that's a lot of money.
Well, to be fair, the thought experiment was, you want to own Meta at 1.5, or do you want to own OpenAI just below $1 trillion? So like there is some margin of separation there, but also it's a buy and hold. It's not a trade, and so it's, do you want to hold this for the next 5 years? And I think it remains to be seen. I know Zuck is playing catch up. He's spending tens of billions of dollars. We'll see what that looks like. But you know where Sam is. You know that he's got some hardware device that remains to be seen. We'll see if Johnny can pull a rabbit out of a hat twice, or multiple times as he did at Apple. But you know that they're going to be the biggest. And I actually think, this whole Claude Super Bowl ad set where it was making fun of them for bringing advertising to an LLM to chat. I think that that's like a fair shot right now. And once again, that goes back to the, like, it's an all out war. Like they hate each other. It's playing out in real time. It's just, you kind of have to read between the tea leaves to see what's going on. But what I actually think is fair, which is both Google and Facebook have been able to accomplish this, and basically nobody else, Twitter, Snap, everybody else has not been able to build a robust enough, a strong enough advertising-based business model. And an advertising-based business model requires you to build an ad network that is providing users with both relevant and attractive information. So like break that down. There's relevance. You know that this is something that you have that is in your search, or it's in your interests, or it's something that you're like literally attracted to on Instagram based on who you follow, whatever it is. And that has to be the elements that provide a successful advertising based business model. If it's just like sticky banner ads that get in the way, like it degrades the product, where slowly over time, it's like paper cuts. It's just like you lose users. And so if they're able to build an ad business like Facebook or Google, OpenAI will be a multiple larger, if not an order of magnitude larger than Anthropic. If Anthropic is already thrown in the towel on not having an ads business, because that's how you get multiple billions of users, and that's how you monetize. Right now, Facebook monetizes at like $20 per user in the US. They're not charging any fees. So assume that like the average revenue per user in the US is like $20. Sorry, maybe that's across the globe. I can't remember my stats. Maybe in the US it's higher. But if you've got 1 billion users who are monetizing at $20, and that's just like pure, and I think that is just a huge business that is ripe for the taking. And it's not gonna be as high margin as Facebook has, but it's gonna be extremely high margin and extremely profitable money, revenue that's coming in. So I think if you have the consumer version of AI, it's going to be orders of magnitude bigger, multiples bigger, potentially an order of magnitude bigger than basically the enterprise only version.
Damn, I've got it. I'm unsure on my take, but I think a lot of the people using ChatGPT for consumer feel really productive. They aren't productive, and maybe there's like a non-enterprise use case that they're using it for. But the OpenClaw Mac Mini people remind me of the NFT people, and maybe maybe we can leave it there for the week. We will be back every couple weeks. We're
We're gonna try and have different subjects, but next week or the week after, we'll be back.
All right. Thanks a lot, guys.